wait for just a minute to get people in here. People join slowly. Good morning, everybody. What's that?
I said I was trying to position my screen here so it doesn't look like I'm looking off to the side.
I know, I do that too. My camera kind of gets upset. Well, good morning, everybody. I'm Dee Dee Richards with MyNHD. I'm Chief Strategist and Communications Officer for the company. And this is one of the MyNHD featuring webinars. It's a series of webinars that we created to help you gain more knowledge about what's going on in the industry, not just about disclosures, about anything that affects your business and the real estate industry, to help you do more business, have you have better conversations with your clients out in the field, gives you some tools and tips that you can take today and go out and do more business. And my guest today is Oliver Walker with Rocket Mortgage. So Oliver, why don't you tell us a little bit about yourself?
Hi there, and thank you, first of all, for having me on the webinar here. It's truly an honor. So I am with Rocket Mortgage. I'm an executive loan officer, originating mortgages here out of the Phoenix, Scottsdale area in Arizona. I'm also a sales manager. I have 7 folks that work for me around the western part of the country here, several in San Diego, all the way up to Idaho, and back all the way down here to Arizona and New Mexico. Been with, we started as Quicken Loans, became Rocket Mortgage a few years back. I've been with the company. A lot of people find this very hard to believe, but for 18 and a half years, I've represented the company. Have watched us grow from when I started about 1,200 folks up to, during the heights of the pandemic, about 35,000 people worked for the company all around the country. And obviously it's one of the most unique markets that I've ever worked in right now in the mortgage industry. So as you say, when you made the introduction there, you know, you like to talk to guests and bring folks on that might have an impact on real estate in general. I can't think of any probably more pertinent input than the mortgage part, right? Because that's obviously having a massive impact on transactions and clients and, you know, business overall in the real estate industry. So happy to answer any questions that you have today, and looking forward to it.
Yeah, thank you. And thank you for mentioning questions. We will do a Q&A at the end. So please write down any questions you have, or just put them in the chat, and then we will go ahead and work on those at the end. So we got some interesting news in the last couple of days, Oliver, that is a little confusing. So 2 days ago, I read a statement from an economist saying the Fed is done raising their right? And then today we hear that inflation increased in August and that mortgage starts are the lowest they've been in something like 28 years. So a lot of folks think that when the Fed raises their the Fed funds rate, that directly affects interest rates for mortgages and credit. And it's not exactly a direct correlation. Can you explain that just a little bit and what it actually is that it's
so
mortgage
I think probably you know, the funny thing for me with a lot of consumers, the day before the Federal Reserve's expected to make a rate change, it's funny how many phone calls I get saying, hey, I've heard the news. I was watching the Today Show and Al Roker was talking about weather, and then he was talking about interest rates and how they might go up. And it sounds like they're raising them. So I want to go ahead and get locked in. The funny thing is the folks on Wall Street and at financial institutions around the country are way ahead of the game on that stuff. So if the Federal Reserve's talking about raising interest rates and then they actually raise them, all of the financial models and algorithms out there have already priced that into the market well in advance. So the consumer is generally the last person. I always bring up the Today Show because that's the one that I've generally watched in the morning as I grew up and as I became an adult. If you're hearing about your news, financial news from the Today Show, you're already a day late and a dollar short. So yeah, when the Federal Reserve, obviously they set their benchmark interest rate, and generally interest rates follow on everything that a consumer, you know, might borrow money for: homes, car loans, credit cards, personal loans. When they raise interest rates, everything moves upwards, and vice versa. When they drop interest rates, everything else follows. So I just took a look at it. by no means do I need a new car, but I think I told you this when we met a couple of weeks ago. I was dipping my toe in the water on what upgrading might look like. And when I looked at the cost of a car note right now with a 780 credit score, 7%, it's like, hey, I definitely don't need a new car.
Right.
But the Federal Reserve, it impacts everything. So you'll see, these reports come out, and, all of the reports feed into their decision-making process. We're going to see day-to-day swings at this point in time, and we oftentimes will see a midday reprice. I would expect that our interest rate sheet, it's going to move either up or down today once the market's done digesting the consumer price index report that came out this morning, the CPI report, and we'll see how that goes. But it's really anybody's guess. My personal hunch about the last 6-7 times that the Federal Reserve's met is, hey, they should be done by now, right? But it keeps on getting pushed back a little further. So, there's just many different schools of thought on when it will happen. But in the meantime, we've just got to figure out how to continue moving things forward, right?
Shirley, I see your question. We will get to that in just a little bit. So thank you for your question about that. And Oliver, I love to ask people this question. Where do you suggest people get some solid financial news instead of the Today Show or Good Morning America or something, or your local news, like you said,
Yep.
It's too late before it reaches that. Do you have a good source for that?
I would say it's context driven, right? If you're looking at solid financial news, like there's many different, ways that you can look at that as it pertains to mortgages, which is, obviously why I'm here. I think if you're in the market for a mortgage and you're looking to make a decision on a mortgage, then working with a mortgage professional who's watching this stuff and is in tune with it and will be communicative and transparent with you, those are the types of things, that's the type of connection that you're looking for at that point. There's not really a place where you can go online and say, hey, what's happening with rates? What general direction are they going? The benchmark that's generally been looked at over the years is the 10-year Treasury bond, because you can usually make a correlation. Hey, it's down one day, interest rates are going down, up the next. Today's news, the CPI report, it all but appeared that we were going to start to see things move upwards a little bit because the inflation was, higher than expected. But we haven't yet seen that. In fact, the way that mortgage-backed securities are trading right now, which is where interest rates are actually derived from when it comes to mortgages, they're actually moving in the right direction to where we might see a better interest rate sheet this afternoon. So obviously no promises, no crystal ball, but that's, kind of what we're seeing on our side here.
Thank you for that. And so really having a trusted advisor, folks, whoever you work with, whether it's Rocket Mortgage or one of your local lending professionals, just making sure that they are really on top of what's going on in the market. They know how to read the tea leaves, and they'll be able to get you the best pricing and explain why that's happening. I think that's so important these days, to be able to explain to buyers why they should lock in a loan rate at the current time, and be able to kind of explain
Absolutely
in layman's terms, right?
Mm-hmm.
What that means to you.
Yeah, we get an email every single day that comes out with our pricing table that tells us the market commentary and kind of what we can expect, what might move the market, what we should be on the lookout for. So that's my data point, one of them. But then I've got a guy that's been in the industry for 30 years on my team. So I usually just say, hey, Joel, how are we doing today? What's going on? He pays for a service that tracks mortgage-backed securities, which is real time. So if we've got impending doom coming or positivity on the horizon, it helps us to make decisions on a day-to-day.
We all need a Joel in our lives, right?
We do. Everybody. I got a guy.
You got a guy, got a lot of guys. So let's talk about the debt that consumers are racking up. This is something that I think a lot of people aren't factoring into our overall economy, is that people didn't really spend a whole lot during the pandemic. They kind of held tight. People were unsure about what was happening with jobs and housing and all of that. And then everything kind of opened up and we went crazy. We had years of lockdown practically that we were like, okay, we're all free now. We're going to go party. We're going to go have fun and buy things and go on trips and not care about anything. And interest rates were still really low when we came out of the pandemic. And our habits, our spending habits didn't really change. And then when credit card companies were seeing that people were getting maxed out, instead of helping them pay their bills, they just increased their credit limits. So we've got a slew of people that have really maxed out their credit cards and are paying now these massive rates of interest. Talk a little bit about some strategies for, and this directly helps realtors when you've got a seller who says, gosh, I can't do anything. I've got a ton of debt, but I've got a lot of equity in my home.
Hmm.
Strategies that you can help realtors communicate with them about.
Yep. So you're talking specifically to sellers of homes at that point?
Buddy, but let's say,
Yep.
you're dealing with sellers who have equity in their homes,
Yep.
but a lot of debt.
So I always answer the question when people say, "Hey, what is equity, and how do I, what do I do with it?" There's two ways you can utilize your equity. You can either take a loan against it. So if you've got someone that's sitting on the fence right now that has $300,000 in equity, they've got $100,000 on credit cards, personal loans, vehicle payments, student loans that are now kicking back into repayment. They could refinance, but right now we're not really seeing a lot of those pan out as far as the numbers go, because you're giving up the large part of your mortgage and taking on a smaller, portion of that to pay off all the consumer debt that you might have. The numbers, and this is a testament to where interest rates are, they just don't pan out. It just doesn't make sense for most people to do a cash out refinance. So the product that we've been using for that type of a situation is just a home equity loan. They pay off credit cards that are in the high teens, low 20s, that are revolving, where the interest rate can still rise every time the Federal Reserve makes a decision. We pay those off with a fixed interest rate that's generally in the single or very low double digits. So that's much more preferable. That's, it's the solve that we have for our clients that have said, "Hey, I've spent a little too much, or I had lifestyle creep in, and
Right.
I decided after COVID to go a little crazy." Side note, by the way, the cost of hotels these days is absolutely ridiculous. It's,
Whoa.
used to be $150. Now it's $500 a night to stay in a lot of the resorts here
I
in
know
the Scottsdale area.
that's like $150. I mean, it's
Yeah.
bananas.
We had my youngest son's birthday is at the end of July, and so we have a kind of a standing tradition to go do a staycation at one of the nice resorts around here. The JW Marriott in North Phoenix in Desert Ridge is my personal favorite,
Okay.
and we were like, "Hey, we'll go there this year." And yeah, $500 for one night, which is outrageous. But I think it goes back to the fact that costs of everything has kind of kicked upwards, and you can't let your 9-year-old son down when you say you're going to go do something. So
For one less day to help pay for things, right?
exactly, yep. So for sellers of homes, if you've got folks that are on the sideline, the other way you tap into your equity is by selling your home, right? If you have a decent mortgage, but you've somehow managed to accumulate a ton of debt, then you can sell the home and tap in on that equity and give yourself a reset at that point. And sometimes that's the right way for people to go, especially if their home is either no longer serving their needs, or it's, let's say they're looking to downsize. So for home buyers, one of the things that I see a lot with interest rates creeping upwards, I'll have a client that comes to us and says, "Hey, we're doing this. We're looking to put 20% down." Do the calculations. If their debt ratio is a little high, if they have other debts outstanding, I'll oftentimes just advise, "Hey, maybe you could take a little bit of that 20%. Maybe you only put down 10%, and we pay off your car note and get rid of a $500 a month car payment, which equates to, an extra X number of dollars on the pre-qualification amount. Pay off your credit cards, give yourself that reset. And if they have the financial wherewithal to do that before they get into the market, if their credit score has been hampered or lowered by any of the consumer debt that they're currently holding on to, oftentimes that will improve as well by them paying that debt off, and then us just doing a little higher on the on the loan amount for the new purchase."
Right. And this is, I think, where it's this kind of a market where realtors can really be that trusted advisor
Hmm.
to selling clients. It is so important to not just say, "Do you want to list your home?" but to listen to, "What's your situation? How can I help you transition into whatever it is that you want to do?" You've kind of raised the flag that I'm looking at potentially selling my home, but I don't know how to get from here to here. And work
Absolutely.
right mortgage professional can absolutely help make that happen and make the realtor look like a rock star, in addition to selling a property, maybe listing a property, maybe selling them another one, or getting a referral to, let's say they want to go be with family back east, they want to move outside of California or wherever they are, that will really help them transition. So I can't stress enough, and when I was a realtor in my real estate career, how closely I worked with my team to make sure that we made things happen for people. We were a resource. I was a trusted advisor in real estate. And that
Absolutely.
you really will always win in any market, because you are there for the client and you're really helping them with their problems and you're solving those problems for them.
Right. Digging deep and finding the angles is huge. I ran a webinar just like this one for about 50 first-time home buyers. We advertised it online, had people come in, and the questions that people ask, because they just don't know, are just very illuminating to how, kind of undereducated the average American consumer is if they haven't, gone down this path of home ownership before. Many people out there still think that PMI is the worst thing in the world. Many people think that you have to put down 20% in order to be able to buy a home, which is just absent. That hasn't been true for a very long time. So there's just a lot of myths out there, and going back to the trusted mortgage guy part or mortgage girl part, if you have someone that, let's say you're an agent and you have a client and you say, hey, I want you to go get pre-qualified with this person, and the person doesn't do the digging deep part, and they look at it through surface level and they say, hey, you don't have enough for down payment, or you are in a position where you don't qualify because of your income, because of these other debts. If they're not looking at angles just like the one that I just rolled out, they're potentially costing you money. Now think about a concept where you send someone to someone that looks for these angles. The homeowner might have a budget of 400,000 or 500,000, but if you unlock the key to where they could go up to 500 or 550, because you've talked about some of these extras, it makes a pretty big difference. And for the agent, I've had agents in the past. I have a very specialized product at Rocket Mortgage that's aimed at kind of lower income folks that do have money, a small amount of money for down payment, but don't make over the area median income limit. And this product, in a lot of cases, it extends people's purchasing power by 40 to 50,000. And for someone that's making, under the 80% of the area median income, that 40 or $50,000, it makes the difference between a 3-bedroom home and a 4-bedroom home, or a 1-bed condo versus a 3-bed condo. So it's product knowledge and, looking at angles and finding ways to make things work.
Helping someone buy their first home is like the most satisfying thing in the world. It's just so cool.
I can't tell you how, we spent a lot of time in 2020 and 2021 doing a lot of refinance business. And it's super Transacts, very quick, very easy. We've got it down to a science at Rocket Mortgage, where I might have 1 or 2 conversations with someone, and then our closing team's calling them to let them know that we're ready to close. But with the purchase business, to take someone from, hi, I saw you online and wanted to just talk about this, and oh my gosh, you made this really easy, or hey, we worked through some real, roadblocks there to get this done, and I could tell that you were working really hard. It's so satisfying. And I absolutely love, if I'm within driving distance of a closing, I'm there every time. I've had agents in the past say, hey, you don't have to come to the closing. The lenders don't usually come. I say, that's my opportunity to be in the room when people are smiling and they're happy because it's done and they're getting the keys a few hours later. It's the best feeling in the world.
We're going to talk a little bit more at the end about a segment of the market of first-time buyers that a lot of realtors might not be thinking of. So that's a little teaser to keep you here till the end. But I think that's going to be really successful for a lot of people. So other than what you've just talked about, is there anything else realtors can do to give their buyers an edge with lending?
With lending, I think what I would do if I were a real estate agent is I would have a conversation with my lender and say, hey, what are you doing to reassure my clients that now is an okay time to transact, and that they should feel like there's a light at the end of the tunnel? Because if you're sending your client to a mortgage person that's saying, hey, here's where we are today, and that's the end of the conversation,
Right.
that's not doing you any favors. If you're sending them to someone that is saying, hey, here's where we are today, it's a terrible time, you're going to hate to sign this mortgage note, but there's going to be light at the end of the tunnel, because here's where we are, here's where we were, and here's historically where we'll come, potentially come back to, then you're building up, kind of confidence with that client, as well as providing obviously all the opportunities and all the programs and finding the inches there. You're giving your client the comfort to transact in a market where a lot of folks are seeing the headlines. It's, mortgage starts are down. Hey, am I an idiot for closing on a mortgage loan right now? We all know that, there's pros and cons at every market, right? A lot of the contracts that I'm seeing, I just saw one come through with 4% seller's concessions, $24,000 in
Yeah,
concessions, right? That's huge. Imagine back to 3 years ago in 2020, if you said, hey, I can't close without cash or within the next 10 days, or I'm using a lender that your broker might not, your real estate agent might not trust, you were being laughed off the phone or never even responded back to. So the
right.
fact that things are happening the way that they're happening right now, it's definitely, there's pros and cons at every market, and your lender should be providing a bit of confidence to your clients as well. So I think everybody should look at their current roster of folks that they're working with and saying, hey, if when I send someone to my person that I've called my lender, because I call around to a lot of agents and interview them and say, hey, would there be an opportunity for you to, potentially send a client my way so I could, have an opportunity to show you how I act in the transaction and how I can help you. Everybody's always got their lender, right?
Yeah.
You have to look inside yourself and say, hey, is my lender doing all of these things? If not, then maybe it's time to add a new one to the roster.
Right, and you can have multiples of, lenders
Absolutely.
that you rely on, and sometimes, things just don't work out for that one particular client and that particular lender. It's always good to have a fallback and see who's going to be the right fit for the right client. That's a big part of it too.
Agreed.
So we talked a little bit about how to give your buyers a little bit of an edge, what sellers can do if they're looking to move and either sell and pay off that debt, or maybe do not a refinance, but you mentioned it was a
home equity loan is in a lot of cases a little bit higher interest rate than a regular mortgage, but less closing costs, and you don't have to pay off the first lien, which a lot of folks, we know the lock-in effect. A lot of folks right now are really hanging on to the. In fact, I humbly believe that that's why we haven't seen any threat of a bubble in the housing market, because there's so many folks that have the majority of their home financed with great financing terms. So the mortgage is the absolute least of their financial worries. For most people that call me and say, hey, let's take a look at this. We did something 2 years ago. We found ourselves in a bit of a pickle now. What can we do? They don't want to do anything with that first mortgage. I've seen folks where they come back and they have a couple of personal loans that are more than their mortgage payment, which that to me seems like the bigger concern.
yeah. Okay, so we mentioned before in our previous talk that you have a way to eliminate closing costs for buyers.
We do, yeah. So in any market, and I've worked with refinance clients my entire 18 and a half years, as well as purchase clients. So in any market, you're either moving upwards or you're moving downwards. It's very rare that there's just a stagnant market where your interest rate is here. And it's, there's been some times where that's been the case. But once the market stabilizes, once my prediction, when we get to the point where the Federal Reserve says, hey, we've done enough on inflation, the economy is starting to see some cracks in it, and we think we should go ahead and lower interest rates to start stimulating markets, whether it be the housing market or the automotive market, or whenever they make that decision, we'll start to see our rate sheet come down. And instead of seeing interest rates that are here, they'll come down. And then the trailing end of that, you're going to have opportunities. Let's just say the current rate of the interest rate of the day drops down to 6%. And a client that's currently locked in at 7 says, hey, I'd like to look at refinancing from 6 to 7, or from 7 to 6, but I want to make sure that it makes sense for the closing costs. It's likely that I'll have an opportunity at, let's say, 6.25 or 6.375, which is still a significant drop, to be able to do a refinance for that client and cover appraisal, title work, lender charges, any kind of closing costs involved on the transaction. So, and the difference between 6 and 6.25, in that case, there's obviously some dollars there, but when we're going into this time where we see interest rates go from 3 to 7 and we start unwinding, we're likely to see the 7 turn into 6.5, into 6, into 5.5, into 5. unless something crazy goes off and all of a sudden we're heading back upwards. But there may be multiple opportunities for folks to do refinances over the next few years whenever the rates do start to come down. And so the concern that most clients will have is, I don't want to pay closing costs 3 times. I'm going to wait until we hit the bottom. So if I find as a loan originator an opportunity that costs them nothing, and we're still trending downwards, there's nothing to stop them from doing something 6 months or 12 months later when the time is right again, if the range goes down. So that there's generally, in a declining interest rate market, an opportunity to do something with no closing costs. Certain loan programs like your VA, FHA streamline type loans actually have built-in provisions that you're not allowed to charge closing costs. They actually have to be all benefit for the client. And recuperation times are heavily scrutinized on those ones because they're government backed. So there has to be that net tangible benefit. I always tell people, I talk to folks all around the country from all 50 states. A lot of times people say, if you can't save me 1% or 2%, my dad back in the day told me it didn't make sense to do a refinance if I can't save X%. And all of that is irrelevant the moment that we can do it when there's no closing costs, because it's all benefit and no drawback.
That's right. That's absolutely true. So again, another benefit of strategizing with your loan officer and really looking at every option that's on the table. I love the idea of doing a home buyer webinar with your favorite lender and inviting people to it, whether it's live seminar or you do it online. That's a great idea, especially if you have a farm or if you are going to market to this next group of folks that we're going to talk about. Is there anything else before we get into marketing and this group of buyers that we really should be going after? Is there anything else you want to chat about?
I think we've covered a lot of it here. I guess the shameless product plug would be our 1% down program. It's called the 1+ program. That product, and it may go right into the next segment here of the clients that we're seeing transact in 2023 here. At 1% down, we give 2% in the form of a grant that looks like a gift fund, essentially, which meets the Fannie Mae 3% requirement for down payment. The kicker with us, and Zillow has rolled out a similar product right here in Phoenix. We do not have PMI on our opportunity. So if you think about it, for the right client, they can get into a home for 1% down plus whatever they're charged in closing costs with no PMI. It's an amazing product. The real constraint and the caveat is that you cannot make over 80% of the area median income in the market that you're transacting in. So here in Phoenix, folks are capped at 79,000 per year. There's other markets like Denver, it goes all the way up to 100,000 per year. So there's definitely, it's kind of market specific, very specific target. But for the folks that qualify for this loan, it feels like I have a cheat code as far as a lending opportunity. I've had clients try to shop it and they come back 2 days later and say, hey, we can still do that, right? Like, yes, we can.
Codes are the best. So how would folks get a list of those parameters that those buyers have to be within? Is there a website they can go to?
I'm going to plug it in here in the chat real quick.
That'd be great, because I'm sure everybody would be really interested to know what that is. And that's a great segue into the last thing that we're going to talk about, which is the segment of the market that a lot of realtors might be missing out on. And that is renters. When we were talking before, Oliver, you were really saying that it's a lateral move between the rents that are being charged these days. They're so high. And then what it costs to purchase a home and the mortgage that they're going to be paying. It is a lateral move for an awful lot of people. And going after that renter market could be very lucrative for a lot of realtors who focus on buyers, need more buyers. Of course, we have inventory shortage right now, so that's not helping. But you could certainly get a lot of buyers to work with you when rates do shift or when inventory opens up, when they feel they're more confident. You can nurture them along and help them eliminate debt. I've helped many clients eliminate debt so they're in a better position to purchase in 6 months to a year. Sometimes it takes that long of a nurturing campaign to check in and hook them up with the right people and really make sure that they're on the right path. So talk a little bit more about that.
So I always like to envision, a person that's renting from an individual landlord, if you will. I know a lot of the folks out there in the world are renting from a corporation or a management company, whatever. But it goes back to the inflation conversation. Things have gotten more expensive, even for companies as well, and definitely for the individual landlord. So at the end of a 1 year lease or at the end of a 2 year lease or whenever a lease is up, generally right now what you're seeing is rents are increasing, and that's making it harder for someone to say, hey, it makes sense for me to continue renting. So a lot of the folks that we're working with, especially the folks that qualify for the program that I just alluded to, they're in a pretty tight price range. It's usually between 350 and 500,000 as their purchase price range. We can do a mortgage for generally about the same as what they're paying for rent. And so when you take someone that's never owned a home before, that's never seen a 2.99% mortgage, they feel great about, hey, my landlord's raised my rent 1 year and then another and then another. And now they're telling me they're going to do it again. So I'm finally in the home market, right? I've saved up a little bit of money for a down payment. So if I take on this mortgage, can it change over time? And they're shocked when you say, hey, no, your interest rate's going to be 6.75 or 7.25, wherever we are for that product, for that client, for that day. But no, the payment's fixed there. And the cool thing is, if we refinance you in the future, it might actually go down. So there's no landlord coming in and telling you, hey, I'm going to raise your rent another $200 a year next year because the Federal Reserve is still high on interest rates, or because my credit card bills are high and I want to charge it to you. That's, I think, a huge market. So I have an agent over here in Scottsdale that I've partnered up with. She's younger, got a lot of young friends. She has a lot of young friends that live in condos, and they're paying $3,000-$4,000 a month for a condo, to rent from someone. And we couldn't think of any better target market than just to go around and say, hey, let's go through this entire condo building and drop a flyer off and say, look at this product. If you've got X amount to put down on a new home, then you could be paying the same amount that you're paying to this management company that's not even based in Arizona. So I think that target market's absolutely huge.
Yeah, I'd love to see more agents go after that market. Of course, like we said, there's an inventory issue. There are a lot of new homes that are being built that are easier to get folks into. And, don't forget that, not just resales, but there's also a lot of new homes being built all over the country. And those are kind of a hot spot right now too. Tap into that renter market is massive. And your title rep, a lot of agents aren't aware that your title rep can probably give you a list of who these renters are. And if you want to target a certain community, they can help you do that too. So make sure you're reaching out to your title reps about, hey, how can I get a list of people that are renting right now? I want to be able to mail to them. I want to drop off flyers. I want to do a seminar. How can I get that information? Help me get that information, and then connect with your favorite lender, your Rocket Mortgage loan officer. And you guys are out there now. You actually, you used to be just online, but now you loan officers out in the field.
We are, yeah. Another shameless plug here for Rocket Mortgage. So the folks that I work with, I told you guys they're primarily around the West Coast over here. They're working with me, but we've hired them from external. Most of my people have been in the industry over 15 years. My Idaho lady, Linda, has been in the industry for 35 years, which is fantastic. So she's planted the Rocket Mortgage flag up there in Idaho, where we might never have won a single client in the past, because folks like to work with people that are local. So we've primarily operated out of 3 different call centers around the country. I've never met face to face with a client, outside of an extenuating circumstance where it was a referral or friend or family member. But now we're planting our flag with Rocket Mortgage Local in towns and cities and places all around the country. We've got, I think we have 180 people right now that are currently kind of holding down a location. And our goal by the end of 2024, I believe we want to be at 500 people around the country. Obviously, Rocket Mortgage will continue to operate on a nationwide scale, but having a lender in your local community that has all of the products and the process that we have that's the goal, to be able to provide a fantastic resource for a local agent.
Yeah, it makes a big difference. And I think the size of Rocket Mortgage, I don't know if you already are, but I know the goal is to be the largest mortgage provider in the United States. And that comes with some leverage. So it is benefit to your small town lenders that are right next door to you or 5 minutes down the road from you, who you have a great relationship with. There's also a benefit to working with a very large company who can make things happen that maybe a smaller company couldn't. So like we said before, it's great to have a couple of different people in your team that you can consult with and ask if they have different products and that sort of thing that might work better with your clients.
Yep. I've interviewed many of the people that we brought on, just curious to kind of see where they're coming from and what value they see and slapping the Rocket Mortgage brand on their chest. And a lot of them just say, hey, I want to make sure that I'm serving my client with the best that I can. And you've always had good interest rates. You've always had so I'll say this, one of the biggest points of contention with folks sending folks through Rocket Mortgage in the past has been the single point of contact.
Right.
Our call center model was set up differently than the new model. And so every concern that we've ever heard from an agent has been taken into account. And that's why my current position exists in the local market, because the agents here and the agents around the country have said, I like you guys. I like the brand. It would be great to work with a big company like you. I know you're fast, which is another huge thing for us. We generally close in less than 3 weeks, as little as 8 to 9 days if needed. But they want the single point of contact, and that's what Rocket Mortgage Local provides. And so, like I said, any metropolitan area where there's a decent amount of business being done, we're trying to find someone that can serve that community locally. We've got folks in small towns in Texas. The furthest north on the map is my lady Linda, who's up there in Idaho. She's literally 10 miles from the Canadian border, which is amazing. I love it, and she does business so differently up there. I go around real estate offices, shaking hands and meeting with clients and things like that here in Scottsdale. She's out dropping candy off at realty offices and saying, hey, I just want to let you know about a new product. Here's a flyer for you. So that's kind of the way that she rolls. So it's interesting to see how folks do business in this position. And she's obviously been doing it for about double the amount of time that I have. So
that's great. And I will say, I personally have closed 2 loans with Rocket Mortgage. One was years ago, and the service was not what I wanted.
Yep.
And then I would say the last one was about a little less than 2 years ago. It was not good. It was night and day. It was so much better and so good, and response times were fantastic. And it impressed me. It really did.
Here's what I've noticed when I stepped into this role and started getting into the community and interviewing people, including friends, by the way. I had a PowerPoint presentation ready to roll out. I had my laptop closed on the table, and I sat down with one of my agents now, who I do quite a bit of business with now. But I said, I'm making a shift. Rocket Mortgage Locals rolling out here in Phoenix. It's me. I'd like to meet with you. And so the first thing she said when she sat down was, well, here's the thing about Rocket Mortgage. And she gave me the laundry list of things. And I said to her, keep in mind, I don't have telepathy. I can't create a PowerPoint presentation while you're telling me these concerns, but let me just run this presentation for you real quick. And there it was. Every single one of her concerns on the PowerPoint presentation: single point of contact, speed to closing, need to get a hold of you. I want to communicate with you on weekends. All of that stuff. Every single concern that was brought up was answered in the PowerPoint presentation that I was ready to present to her. So now we've done, I think probably 4 or 5 loans to get 4 or 5 transactions with her, one of which is closing tomorrow. But the perception has definitely changed, and I think you'll continue to see that even more and more.
Absolutely. So we're going to wrap it up here shortly. We're going to get to your questions in just about 5 seconds. 2 things that I really want people to take away from this is, well, there's more than that, but having a great lender that you can rely on, or multiple lenders that you can rely on. I hope you give Rocket Mortgage a chance and look for any loan officers in your area. They are building out throughout the country. And then also really being that consultant, that person in your buyer or seller's world that can help be the conduit to solve the challenges that they're facing. And lending has a lot to do with that. So I think we might have a little bit more inventory if we looked up those sellers who own their homes and have absolutely no mortgage and might have been there for 20 or 30 years and might be wanting to retire and downsizing, like you said. There are so many things that your title rep can help you search for. You can go down demographics, say, I want people who've been in their home 20 plus years. I want square footage of 3,000 square feet or more. And I want that list to also have owners that have zero mortgage. They own their home completely. Those people are probably ready to retire. The kids are gone. They might be, you can even say, I want ones with pools, because nobody wants to clean their pool after a certain age. Kids are gone. The grandkids aren't using it. Everybody's out of state. Nobody wants to do that anymore. So get creative with your title rep about the list that you can go after. That's for sellers. In addition, on the buyer side, we want you to look at those renters, those people who are renting high-end or medium. They probably can pull some money somewhere for a down payment and have a lateral move in what they're paying every month in rent versus what they could be paying to own their own home and never have to worry about their monthly payment going up again. What a wonderful thing to be able to offer to somebody. You're going to get all their referrals, all of their friends and people that they know, and coworkers, everybody that's still renting, and being able to help them, their friends and families do the same thing. So we have two questions from Shirley. The first was, how can we get loans for foreigners who have no credit in the United States? You hear that quite a bit. And what is the 1% program just for first-time buyers?
Yep. So the 1% one, that was an easy question. I answered that one. That is not just for first-time home buyers. The only constraint is that there's obviously a maximum debt to income ratio and a maximum income. So you can take a look at that link that I just sent, plug in your town or your zip code, and actually look up what 80% of the AMI is, the area median income. And it's pretty easy to do the calculation. And then whether you have a loan originator contact, or if you'd like to contact me directly, we can take a look at the math, crunch based on what your tax base is, what general insurance costs would be, and then it's pretty easy to figure out what the max purchase price is. Here in Phoenix, 79,200, I believe that's the number, is our limit. And so right now, that's generally good for a 4 to 450 on the purchase price. But as I mentioned before, a market that I also do quite a bit of business in Denver, theirs is up to 100,000 with similar type property taxes. So for that area, they can go up to more like 600,000 on the purchase price with the same program. So this is a great loan, the 1% down, just to really hammer home the program. Government employees that have a steady, stable, but not explosive salary. People that are entering the workforce, let's say young professionals coming out of college that maybe have a little bit of money, or maybe have a parent or sibling that might lend them some money for their down payment. Perfect type of product. So that's generally who we're targeting with that one.
Yeah, that is really, really great to hear. And in some markets across the country, we are seeing prices increase. And in some markets, they're still depressed. So this is a great opportunity to get a buyer into a home that's maybe been sitting there for 30 or 40 or 50 or 60 days because it's a little overpriced. Sellers are getting impatient, come in, make a really solid offer. I don't want to say lowball offer, but a good offer, and get your clients into a home with this 1% down program. Just the coolest.
The ideal, in my opinion, the ideal iteration of that is if the agent can go out there and get the client 3% sellers concessions.
Right.
Let's use 400,000 for an example. The client has $4,000, right? That's just over 1 month, maybe 2 months rent. They have 4,000 to put down for their 1%. If you, the agent, gets them 12,000, chances are we can structure a loan that's going to cost them nothing at closing, because the concessions pay for not only all the closing costs, but probably their first year homeowners insurance, and then whatever we need to put in escrow impound for taxes and insurance. So they can theoretically close on a home. In fact, I've done this for a client in Louisiana. This was the one that tried to shop me and came back and said, "Hey, that's too good to be true," or her agent did. She was looking out for her. Yeah, $3,000 out of that person's pocket, and they were a homeowner with $9,000 in equity because we gave them 6 of it.
That's amazing. That is really the coolest. So can foreigners who have no credit in the United States get loans?
I have to plead the fifth on that one because we do not offer that through Rocket Mortgage. There are companies out there that will do a loan on, I believe it's an EIN number, just an identification number. We do not do that, unfortunately.
So there are options out there, maybe a Google search or asking your local community lender if they know of anything like that, asking your office if they know of anything like that. That would be great. If there aren't any further questions, we'll just ask if there are any further questions. Let's pop them into the chat. And I think we're not seeing any more. All right, so I'm going to close it up. Oliver, thank you so much for being with us.
You're welcome. Thank you for having me. I truly appreciate it.
Absolutely. You guys are great. And it's wonderful to keep this conversation going about how we can help our buyers and sellers with their real estate situations through lending. So we really appreciate your time.
Absolutely. Pleasure to be here.
Hey, everybody, have a good one. We'll see you next time. Bye.
You too. Thanks, Stevie. Bye.